Hey everybody, Smart Silver Stacker here. Hope you're doing well. We need to talk because what is coming will shock markets. I don't really know any other way to say it. Never before in my decade plus history of following the gold and silver markets have I been so convinced that we are on the verge of a major rally in the precious metals. Part of the reason that I'm so confident at the moment is that really this rally has already begun. Back in March, gold finally broke out of a huge multi-year cup and handle formation, and it has been hitting new record highs ever since. Then in April, the silver price broke out of a lengthy consolidation pattern that dates back to 2020. Since those breakouts occurred, we've had a big run up in both gold and silver, and then we had a mild pullback in the price of both metals lasting about a month. Gold and silver both retested previous resistance, which now has clearly become support, given that the metals have already bounced off of the lows of that short correction. And it appears that the next phase of this rally has now begun. From a technical standpoint, the outlook for the precious metals could not be more bullish. But given the fact that gold is already up more than 13% year to date and silver is up nearly 20%, you might think that you have missed out. But when you consider the fundamental picture and we examine some of the traditional valuation metrics for these metals, I think it will become clear that the vast majority of the gains in gold and silver still lie in the future. For example, let's take a look at the gold to silver ratio. This ratio tends to reach a low near the peak of a precious metals bull market, as it did back in 2011 when it dropped below 33. This is because silver, the price of which is more volatile than gold, tends to outperform gold by the time a bull market wraps up. And the same is true in a bear market. That's why this number tends to rise as the price of gold and silver fall, because silver falls faster than gold. And it's true, the ratio has declined following the breakout of the metals, but it is still very much near the high end of the historical range, an indication that this bull market is just getting started. The picture becomes even clearer in light of the fundamental situation in the economy. The job market is weakening, the economy is slowing, debt at all levels is exploding, and yet inflation remains stubbornly high. The U.S. banking system has come under tremendous pressure following the Federal Reserve's inflation-fighting campaign of higher for longer interest rates and quantitative tightening. The commercial real estate sector is on the verge of billions in losses. The banks are sitting on piles of devalued, low-yielding U.S. treasuries, and the only short-term solution to prevent a full-on economic collapse is going to be more easy money from the Federal Reserve. The U.S. central bank, it's being backed into a corner here, where they will have to make the difficult decision to either allow the whole rotten system to implode or to debase the currency and open the floodgates of liquidity. Time and time again throughout history, inflation has been the route chosen by central banks, and I see no indication that this time will be any different. The real problem, of course, is massive government deficit spending and the accumulation of enormous debts at the federal level, a problem for which there simply is no expedient political solution. And so, lucky us, we're going to witness the economic meltdown brought on by the debasement of the world's fiat reserve currency, the US dollar. Of course, this isn't what we're being told.
We have the strongest economy in the world. Let me say it again, in the world.
But that's really an advantage for us stackers, because once the economic reality becomes clear to the population at large, a huge tidal wave of fiat is likely going to flood into the precious metals, driving the prices sky high. We're already witnessing this with record high gold prices driven in large part by huge central bank buying. But the public is starting to become more interested in hard money as well. In South Korea, for example, it's being reported that gold is flying off the shelves in convenience stores. In the US, Costco is getting in on the action, selling out of both gold and silver physical bullion. So how high could these precious metals go? Well, Goldman Sachs has raised its year-end gold price target to $2,700. But if we adjust previous highs in the precious metals for inflation, the potential for high prices is clearly even greater than that. In January of 1980, gold hit a high of $850. Now, if you adjust that for inflation, it gives you a price north of 3,200 of today's dollars. And for silver, which hit $50 around the same time in 1980, we're talking about an inflation-adjusted high of over 180 of today's dollars. But honestly, I think that those prices are even fairly conservative targets when you consider how much inflation is likely to be unleashed by the Federal Reserve moving forward. So what do we do about it? Well, look, I'm not a financial advisor. I'm not telling anyone what to do, but I am stacking physical metal, coins, bars, rounds, even gold backs. I mean, you name it. I like all of this stuff. And I'm also investing in businesses that will benefit from this inflation environment and higher gold and silver prices. Physical gold and silver represent your wealth insurance. They are real hard money outside of the digital financial system, a savings account that cannot be devalued by profligate government spending and the central bank's printing press. But in addition to preserving one's wealth from the ravages of inflation with physical precious metals, the coming bull market in gold and silver will provide opportunities to grow wealth as well in the more speculative portion of one's portfolio. I'm talking about assets that stand to benefit tremendously from elevated metals prices and which are likely to outpace the gains in the metals themselves by a significant margin. Yes, there is more risk investing in these assets than in saving in physical metals, but along with that additional risk comes the potential for drastically higher returns. I'm referring to assets like today's video sponsor, Rua Gold, OTC ticker symbol NZAUF, a high-grade junior gold exploration company. In the coming metals bull market, we could see the price of gold double. We could see silver triple or even quadruple in price. But what you have to understand is that if that happens, high-quality junior gold companies like Rua Gold, those are going to be your 10-baggers or even better. Now, let's get into why I say that. Let's start with the location. Rua Gold is an emerging gold explorer with two prospective land packages in New Zealand's historic gold fields. And this is very positive for multiple reasons. Now, I'm no expert in New Zealand's domestic politics. However, the new Prime Minister who took office in November of last year, Christopher Luxon of the centre-right National Party, does represent a significant shift in the status quo there. With a history as a business executive for Unilever and more recently as the CEO of Air New Zealand, his electoral victory suggests that the political situation in New Zealand just got significantly more friendly to businesses such as Rua Gold. The other geographic feature of New Zealand that we need to touch on is its incredibly rich gold deposits. How rich? Well, consider this. The average global grade of gold reserves in 2023 was 1.23 grams of gold per ton. Now, the first of Rua Gold's land packages is located in the Reefton Goldfield on New Zealand's South Island. Rua controls multiple contiguous properties there, and this goldfield has historically produced with a grading of 24.5 grams per ton of gold, roughly 20 times the global average grade. And their second asset, the Glamorgan property located in the North Island in the Hauraki Goldfield, is adjacent to a high-grade district with recent drilling results as high as 79.2 grams per ton of gold. These kinds of numbers are why Rua Gold is referred to as a high-grade gold explorer. And let's talk about that for a moment, because sure, there are other high-grade gold explorers out there, so what really sets Rua Gold apart? Well, among their peers, Rua is a brand new entrant to the market and currently has the lowest market capitalization at just under $25 million. And that means that the potential for gains here is absolutely enormous. Another very promising aspect of Rua Gold's operations on the South Island of New Zealand are these 4 past-producing historic mines that it has acquired: Capelston, Murray Creek, Ajax, and Crushington, because these properties produced very high-grade gold ore decades ago, but they've never been explored at depth. Rua is now applying modern drilling techniques to go deeper, and there is the potential for significant new discoveries that have not been priced in yet. There is even a possibility for Rua to become a functioning gold producer in very short order, as these mines have existing infrastructure in place. So Rua Gold is exploring for and might even soon be producing gold in a location with incredibly rich deposits. And at the same time, markets are on the verge of a tremendous bull run in the price of the precious metals. It's not hard to see why the setup is pretty good here. But you don't have to take my word for it. You can simply look to the other investors in this project. Eric Sprott, for example, perhaps the best known resource sector investor alive today, who has made billions in this space, is invested in Rua Gold. Another big name on board is Peter Marone, the founder of Yamana Gold, which sold in 2023 for $4.8 billion. The chairman of and largest shareholder in Rua Gold is Oliver Lennox King, one of the wealthiest investors in New Zealand. He also happens to be the former chairman of Frontier Gold, which was acquired by Newmont Mining for north of $2 billion. So you can see that there's quite a bit of experience on the Rua Gold team, and anyone who buys shares is in good company. But the CEO of Rua Gold, Robert Eckford, I think he is the best example here. Robert is the co-founder of Aris Mining, where he served as the head of finance. Now, in that position, if you add up his salary combined with his annual equity stake, he was being compensated to the tune of close to $1 million per year. And he left that to come work as the CEO of Rua Gold for about a third of that compensation. Now, why would he do that? Well, he's betting that his equity position in Rua Gold under his leadership will earn him a fortune. And that is what I call skin in the game. Now, if you want to have some skin in the game in the coming gold bull market, and you can tolerate the risk that comes with a speculative play, along with the potential for a big payoff, then make sure to check out Rua Gold, OTC ticker symbol NZAUF. But look, seriously, do not go out and buy this stock just because you saw it on this channel. I'm not a financial advisor, and speculative bets, they're not for everyone. There are a lot of factors to weigh. You need to go out and do your own due diligence. And a great place to start is by visiting ruagold.com. There is a link down in the description, so check it out. And do me a favor, leave me a comment down below to let me know what you think about what is ahead for the price of the precious metals and how we can position ourselves appropriately. Thanks for watching, everyone. Stay safe and happy stacking. I'll catch you next time. Smart Silver Stacker out.